You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 5/17/21. And guess what? That nasty thing from the 70s has reared its ugly head once again. No, I'm not talking about the Nehru jacket. Maybe that was the 60s. Not talking about cars, 1970s vintage cars that were really garbage. No, I am talking about inflation. And do you think they're telling us the truth about inflation? Do you think the measures are accurate? Is it real? Is it here to stay? Are we going to see massive inflation? What are your thoughts? And how is it affecting you and your family and your ability to thrive and to get along and to meet your obligations? Why don't you send us an email to kl@kerrylutz.com. Let us know what you think. In the meantime, our good friend, Dr. Michael Busler, is back with us now. Dr. Busler, you are a public policy analyst and a professor of finance at Stockton University, which is located in my home state, my state of origin, New Jersey, the People's Republic of New Jersey. It's great to have you back on here. So inflation, gas lines, the only thing that's missing is Billy Beer. If we had Billy Beer, I think we could make a full Back to the Future transition here in our DeLorean with a flux capacitor.
Yeah, it certainly looks like we're heading back that way. And thanks for having me on your show, Kerry. It's always my pleasure to be here. So first of all, how bad is inflation? So inflation just means prices, generally rising prices. For the last 40 years prior to this year, inflation has been less than 3% a year. In fact, for the last 10 or 12 years, it's really been at 2% or less. And the Federal Reserve makes that, or at least they used to, make that their number one priority, keeping inflation low. So now what happened? As a result of a few things that we'll talk about in a minute, the inflation has really started to flare up. So the federal government measures inflation by buying a basket of goods the average consumer is likely to purchase. They do it in 53 cities. And then each month they do that and they see how much prices have gone up from one month to the next. So all through last year, the Consumer Price Index, CPI, which is what they measure, went up 0.1% in a month, or maybe 0.2% in a month. So for the full year, it was less than 2%. Where are we today? January, the Consumer Price Index went up 0.3%. That's about a 3.5% annual inflation rate if it did that every month. February, the CPI went up 0.4%. That's about a 4.5% inflation rate if it did that all year. March, the CPI went up 0.6%. That's, if it did that all year, that would be a 7% inflation rate. And April, the CPI went up 0.8%. That's over a 9% annual inflation rate. So inflation starting this year is going up. And I think it's going to get a lot worse. Now, to be fair, the president's economists don't agree with me. Before we got on the air, you mentioned the term transitory inflation. So what they believe is that the run-up in prices is a short-term phenomena due primarily to disruptions in the supply chain. In other words, because of the virus and some of the bad weather, companies aren't operating at full capacity. So there's a shortage of things like lumber and even some food and some commodities. And as the economy's recovering and there's a shortage of supply, that's what's pulling prices up. They argue, though, that when the economy fully reopens within the next couple of months, we hope, the supply will increase and that'll put downward pressure on prices. And they don't think we'll have a long-term inflation problem. So that's the President Biden's economist view. Now, why do I disagree with that? Well, I would say the supply chain disruptions may add something to inflation, but it's not the primary reason why we're experiencing it today. What are the primary reasons? I think there are four. One, the Biden administration has declared war on fossil fuels. And as a result of that, you can't drill on federal lands anymore, which the Trump administration allowed. They canceled the Keystone Pipeline. They're looking at canceling the Dakota Pipeline. That will put restrictions in supply at a time when the economies of the world are expanding and demand is going up. And that high demand and restricted supply are pulling energy prices up. I don't know if you bought gasoline lately, but you're probably paid, depending on where you are in the country, 75, 80 cents a gallon more than you did at the end of last year. So energy prices will continue to rise. That ripples through the whole economy, because not only does it affect what you pay for gasoline and heating oil, but it shows up in what you pay for finished goods because they had to be trucked there. And the trucks had to pay more energy costs. So higher energy costs are here, and that's going to keep inflation up. Secondly, the Federal Reserve has massively increased the money supply. If you look at the M2, which is what we generally look at, that's increased more than 25% in the last 2 years. When you have that much money in circulation, the old too many dollars chasing too few goods, that's highly inflationary. We saw that back in the 70s, that we had that bad inflation, 1980, 81. The Federal Reserve said, we've allowed the money supply to grow too rapidly. We're going to reduce the rate of growth of the money supply. Interest rates go up. That'll take some demand out of the economy. It did bring on a recession, but it brought inflation down from 13% in 1980 down to 3%. And because the Federal Reserve constantly did not allow the money supply to increase too much, inflation has not been a problem. Now the Federal Reserve is following what they call modern monetary theory. And that says that if the economy is not operating at full capacity, you can increase the money supply, even pay for federal government deficits, and it will not be inflationary. And they cite what happened after the 2008-2009 recession. The Federal Reserve massively increased the money supply through their quantitative easing program, and yet it did not bring any inflation. So they argue they can increase the money supply without bringing on inflation. Now, why would I disagree with that? Well, when the Federal Reserve increased the reserves, eventually the money supply in 2010 and 11 and 12, when they increase the reserves, it ends up eventually the money goes to banks. Banks lend the money out, and there's a multiplying effect of what the Fed does. There was no multiplying effect from 2010 on because the Federal Reserve, the Congress passed the Dodd-Frank bill. The Dodd-Frank bill made it impossible for banks to make what they called predatory loans, giving loans to people who don't deserve them. But it also made it very difficult for banks to make any loans. So when banks have trouble lending money, there's no multiplying effect on the Federal Reserve. And as a result, there might not be inflation. What's different today? In 2018, they repealed most of the Dodd-Frank bill. So now banks have much easier time lending money, and we'll go back to the original monetary theory that said if your money supply is growing too fast, you're going to get inflation. So high energy prices, one, a rapid growth in the money supply, two. Number three, the federal government is spending money like there's no tomorrow. Last year, they took in $3.5 trillion in tax revenue. They spent $6.5 trillion, a $3 trillion deficit in 1 year. This year, depending on what else President Biden gets through, the deficit will be at least $3.5 trillion. Now, pumping that much demand into the economy will lead to pure inflation. So that's the third reason. The fourth reason is I'm afraid of businesses having trouble raising capital. And the reason is the federal government, through deficit spending, has pumped up demand in the economy. To finance the deficit, they sell bonds. So when they sell bonds, it pulls money out of capital markets. So now if there's not enough capital for business to expand, to meet the new demand, the only thing left to do for them is to raise prices. So high energy prices, a rapid growth in the money supply, huge federal government budget deficits, and a potential capital shortage for business will all continue to feed inflation. And I'm afraid how bad it could get by the end of the year, since the Federal Reserve looks like they're not going to do anything, at least for some time.
All right. Well, hey, when you print up all this money and you keep spending up at like drunken sailors, not to insult drunken sailors, of course, because we do have a lot of drunken sailors that listen to the show, and we wouldn't want to offend you out there. But, look, something has to give. You can't have spending. You don't have taxes. You have deficits. As far as the eye can see, 90% of the spending this year so far was deficit spending by the government, by the U.S. government. They're paying off everybody's debts. You're going to pay off student loans, everything else. What do they expect to happen? How can you not have inflation?
Don't just survive, thrive. The Financial Survival Network.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beatty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful, it's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beatty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, that's exactly the view I would take. Again, their economists are saying only 2 things. One, that the inflation is caused by supply chain disruptions, and once the economy opens, that'll go away. And if you're worried about inflation because the money supply has grown too rapidly, don't worry about it. Even though traditional monetary policy theory tells you that is inflationary, the modern monetary theory says that's not inflation, it's not inflationary, and as a result, we're going to continue to increase the money supply. They're going to have to react at some point. Chairman Powell is more dovish than any chairperson, I think, ever. Normally, when inflation starts to go up, as I said it did in January, February, and March, the Federal Reserve would say, hey, we're aiming for inflation. I want to stop it before it gets to be a problem. They would start raising interest rates slowly, but they'd start raising them right away. Remember, in 2017 and 18, the Federal Reserve raised interest rates 8 times, 1/4 of a point each time, and they felt that was enough to take demand out of the economy, so we didn't have inflation, which we didn't. Now, some people argue they were a little too aggressive, and as a result, we didn't get as much growth as we expected. But nonetheless, when they do act, it does keep inflation down. They really need to act sooner rather than later. Otherwise, we're going to have a very severe inflation problem.
All right. Well, I couldn't agree with you more. It's happening right before your very eyes. If you don't believe there's inflation, look at housing prices. Look at what's happening. Yeah, gasoline, and look what's happening with gold and silver prices heading up. Bitcoin, cryptos, although they haven't had the best weekend in history, but certainly they've skyrocketed. All of these are indications of inflationary expectations that things are going to be happening in the markets that aren't necessarily beneficial. If the stock market rolls over too, then where are we then?
Yeah, we're in a tough spot. You know, Kerry, you brought up a very key word there, expectations. Once consumers start to expect inflation, it ends up making it worse. Why? Normally you go to buy something, they raise the price, and you say, well, I'm not going to buy it now. You raise the price, it isn't worth it. I'm going to cut back on what I buy. And that's a normal reaction to prices going up, and that reaction helps to keep prices down. Once you have inflationary expectations and the price goes up, people start to think, I better buy it now before the price gets higher. And what that psychology feeds inflation. And that's what's real hard to break. And it may take a recession. If this gets bad enough, it may take a recession to finally break that psychology.
Wow. Well, that's very possible. We've seen such things happen before, and it certainly wouldn't surprise us. Hey, what are your thoughts? Let us know. Send an email to kl@kerrylutz.com. Dr. Busler, how do we find you? How do we read your work and keep track of you on the web?
Sure. So 2 ways make it easy. At Twitter, I tweet out every one of my columns. It's @mbusler. That's @mbusler. And if you have a Facebook page, search for Funding Democracy. Funding Democracy. All of my columns will pop up there, and I'd be real happy if anybody followed me.
Excellent. All right. And there's a link in the show notes on Financial Survival Network. Make sure you go sign up and get your free newsletter. Appreciate it. Great to talk to you, and good luck. We'll talk to you again real soon.
Thanks for having me, Kerry. My pleasure. Look forward to doing it again.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.